welcome to the StockMinter.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. I'm going to start out here before we get into the trading, just showing you where we're at for the week in the trading room. All right, guys. So I'm sorry I'm getting this video out a little bit later. Just got busy with some students earlier tonight and didn't get around to rendering this thing until just now. So I know it's a little bit late, but at least it's out there. You guys can take a look at it. And there's a lot of good information that'll be coming in the video once we're done with this. Here's what we've done for the week in the trading room. We've moved off of the ES, which has been a little erratic lately, and moved on to the EMD. We've taken a gold trade. We've actually taken a couple of gold trades, but I haven't logged the other one. We built a short up around 1880, 1900. We were building a short position. I just haven't logged it. We've taken one other gold trade, but mostly we've been working within what's called the EMD, which is a mid cap. Instead of $50 a point, it's actually $100 a point. I don't recommend it to people that aren't familiar with the futures or aren't real good at trading the futures. I don't recommend you try it. It moves actually much more smoothly, I believe, than the ES, but at $100 a point, it can get away from you kind of quick if you don't know exactly what you're doing. However, I love it. It allows for a much better risk to reward ratio for me actually in the trading room, which I love. And the profits are nice here. On the ES, if you move 10 points in the ES, which is quite a move, it's only $500 on one contract, but on the EMD, it moves a lot smoother. And it's $1,000 for every 10 points, which is very feasible over the course of a day or whatever. So anyway, over the last couple days, we've been able to pull out about $1,900. Now remember, that's max potential. Max potential. Some people aren't in the trading room the entire time. Some people aren't in every day. Some people don't take everything I recommend. Some people don't follow my exits. There's many, many factors that go into what you will and won't make within the room itself. Some people are actually making more. They're trading more than one contract. They're trading 2, 3, 4, whatever contracts. So they're actually coming away with more. But max potential on one contract, about $1,900. Even if you can pull $400 or $500 out of that for a couple of days, that's really good. It's really good extra money. I really invite you guys to jump in, try it out. It's been very profitable. We've been at it a couple months. I'm constantly evolving the room to make all of us more profits, and this is one way we've done it now, and I'm loving what I'm seeing. So try it out. Jump in. If you've got any time during the week, time during the day, you've got to try it. It's well worth your time to make some extra money doing this during the course of a day. All right, guys, let's move on to the markets. So looking at the charts here, you can clearly see that we really, in the last week, haven't really we haven't really moved a whole lot. I can draw a line straight across here. 11,239, actually, this is great. This is a good indication. Take that line, draw it straight across, nothing. Very difficult trading, can be very tough. If you're intraday trading, that's not so bad. We've had some good moves up and down to make a little bit of money during the day. However, from an investor standpoint, it stinks. It's just nowhere. You're just sitting around waiting for something to happen. Ultimately, giant bear flag. Nothing's changed. So if you want an Elliott wave count, my count has always been this is the bottom of 3. And then there was some whatever in through here. I think now it's A, B, C. This is 4. We've started 1 of 5 down. This is 2 of 5 down, followed by 3 of 5 down yet to come. That's my primary count at this point. Will be validated when and if we break this 11,000 mark. So if you guys get down below, well, let's call it 10.9. If we can break this 10.9 mark down here, guys, that is your get shorty moment. I'm telling you, that's a really good place to start looking for some shorting opportunities. And it would then hopefully carry us down in and below these 10.6 and lower levels at that point, making for a beautiful trade to the short side. To the long side, we're just still stuck in this thing. It's going to have to break up and out of this thing 11.9. I know there's a bull count out there calling this maybe a truncated fifth or something, and then this is wave 1, this is wave 2, and we're starting a new wave 3 to the upside. I'm not seeing it. That would be a distant count for me, but hey, overall, I'm really just watching for it's going to have to at some point break 11.9. So for you bulls, you can keep trading in through here, keeping in mind that about every 100 points you're going to have overhead resistance. 11.5, 11.6, 11.7, 11.8, 11.9, on and on. 11.9, we get back above that, okay. Now maybe we can start talking about some new wave structure of some sort at that point. Maybe we are pushing to new higher levels. But for you that are into maybe the swing trading, longer term trading, this is your bigger break right here. Just keeping in mind that if we start at 11,239, draw a straight line, we've gone nowhere. Just nowhere back from early August. So if you're frustrated with your trading, if you're not making a lot of money, you and probably a lot of other people, this has been very difficult to make any kind of money in through here from a swing trading perspective, unless you find some really good, strong fundamental stocks. And those are the ones to really follow then at that point. Those have been able to pull out some money. But as a whole, the indice, if you're a SPY or an SSO or any kind of an ETF trader, yeah, it's been kind of difficult to kind of buy and hold. You just never know what you're going to wake up to. Now, today's push, very steep. We have gone from basically 10.9 to 11.4 in one fell swoop. There's been very little in between to mark it as, some sort of a pullback. One small little pullback in this area here, but otherwise straight up. So, can the pressure continue? Yes. I just don't think it'll last very long, to be quite honest. I think it's trying to stretch it out. I think it's trying to pull bulls in. I was happy, actually, with the internals today. I thought the internals looked really good. Everything was confirming what we saw all day long, so it was real easy to just kind of get in, get long, make a little money. It was basically all day long, it was up, high base, up, high base, up, high base. That was the story of the day from a trading standpoint, and pulling out point here and point there along the way. So I don't know if the pressure is going to continue. That would be, and when the next drop happens, I'm not even saying it's the drop. It's not wave 3 down. I won't even go that far. It could just be a pullback. Point is, there's something coming. Whether it's tonight after hours, whether it's tomorrow, there is a move to the downside coming, and it should actually be pretty decent. We should be able to pull maybe a couple hundred points out of the Dow, 20 points or so out of the SPX. So that's what I'm really most focused on now. Not getting ahead of the game. I'm not trying to call, hey, we're headed to, we're headed to new lows with the next move down. I just want to keep my head about me and say that we're looking for at least a pullback. How about that? Let's start there and work our way from that point forward. From a daily on the Dow, you can see this push upwards. So far, so good. Participation hasn't really been there. It's been a little bit light. I think everybody's still on their heels. Bigger picture, guys, we are back above the 20-day moving average. We closed back above the 20-day moving average, so it's a start for the bulls. There's still, there's a head and shoulders pattern forming right here. There's a bigger head and shoulders pattern forming right here. Very common right before we see drops. So I'm still kind of stuck on the whole bearish type scenario because of the two head and shoulders patterns that we're working on. But overall, there's opportunity here to still sneak our way up into these upper levels. Looking at the NDX 60-minute, you can see we already filled this gap, so we're already kind of working our way upwards here into these higher levels. NASDAQ so strong, 2.59%. Another one you guys need to watch is the Russells. It was up like 4.5% today. If you're bullish, you'll love that. Those are the two indices that are usually the strongest and really should be the strongest if we're going to push and push up anymore. Those are the ones you want to watch carefully. Right now, though, filling this gap, I don't think the SPX has made it back to its gap fill, but it's awful darn close as we approach that 1200 area. Next area above me now is 1200 to 1210. Those will be the bigger areas I'll be watching going into tomorrow for your overhead resistance. On the NASDAQ, though, you can see back up above this level. We've had a couple of attempts here on the weekly at 2265. Absolutely a line in the sand. 2265, then 2287. If those get broke at any time, oh boy. So it's not just even the break, it's the close. Okay, so if you're watching this thing to the upside, these are big levels. The NASDAQ gets up above these and closes above these. Yikes. Now keep in mind, weekly, or this is a daily, so we've got to close there by the end of the day. They've held nicely so far, but any further approaches into that area, you want to be very cautious. Got to have this stuff marked on your charts too for overhead. Weekly, same scenario. We've got 2256, 2283 with the 20 and the 50. Same thing. Look at this mess on the NASDAQ to the upside. We clear this area. So the bulls could be back in charge. They could see a little bit, even some higher prices yet to come if they can get up and above these areas. I wouldn't expect that the SPX and the Dow would follow, especially right away, but it would be very close at that point. 60-minute coming into and above, this can just mess of moving averages basically is what we're looking at here. And trying to hold straight up back into the 1198. We are and did close above the 20 and the 200 period moving average. Well, 2050, I mean. The 50 and the 200 period moving averages here, holding on to that 1200 area. So we'll see if they can continue to hold that coming into tomorrow. I think that'll be big. Holding this area for another day will be huge for the bulls, and maybe start to get the bears a little bit on their heels with the whole, well, maybe they've got some power here type of mentality. Watch those very closely tomorrow. Same thing here. Push back above the 20-day, closed above the 20-day. 1220 being one of the more major areas to watch to the upside on the SPX. But still, a little head and shoulders here. Shoulder, head, potential right shoulder, or left shoulder, head, potential right shoulder. We'll just wait and see how it all plays out. Overall, bear flag. I still have to be bearish on it. VIX down as well, but still holding up and above this 30 area, which you know is more bearish in my book. Same thing from a weekly standpoint, still holding up very, very strong, but confirming what we're seeing in the markets. As we push upwards, the VIX is moving downwards, just not all that far. We haven't hit these lower areas yet. Doesn't need to, and still ultimately looks to me like a 1, 2, 3. This is a bull flag 4, which is precisely the opposite of what we're seeing in the markets. With a bear flag, still kind of confirming for me that the next move I still have to expect is down. FAS coming up into these overhead areas could maybe close this gap. If it's going to stretch and really reach for an upper level, this could be it. 1460-ish level. That's the one to be looking at for overhead resistance. I'm not big on going long right here. You're chasing. You're just trying to catch a falling knife. You're going to get hurt. Don't do it. Stay out of it. Same thing from a daily here. We're caught within a big range. Your next moves on FAS, if you want to get in, for me, are above 1550 and below 1150. FAZ, same type of scenario. We did close the gap on FAZ right here, so it's already done its job. But bigger picture, going back to a daily, it's the same type of thing. Looks like a big sort of big, fat, ugly bull flag, but it is what it is. Below 50 and above, wow. I'd sneak in above the 20-day. How about that? So back above the 20-day and back below 50 for your entries long and short on FAZ. That'll do it for today's video. Like I said, still bearish, just looking at a big bear flag and waiting to see which way it resolves. Could be some sort of complex correction for you Elliott waivers out there. This could be A, B, C, X with another A, then a B, then a C left to come. Who knows? Point being, breaks of 10-9, short. That's your big point. I'm kind of an SPX guy, so we'll go there. 1140, that's my area. Back below 1140, get short. That should, then 1120, then 1100. Those are your next entries. We get back below 1140. If we can even make 1100, that's a 40-point trade. Who doesn't love that? So this is where we'd be looking at coming into the next few days. Of course, watching potential shoulder, head, right shoulder forming. Only time will tell.